So now we know all the basics and we are ready to place our first order in the futures market. Again, over here, we're going to choose the future contract that we want to trade. I'm going to choose the Bitcoin US dollar Tether perpetual future contract. Now here on the right side is where we can place our order. We can choose between a limit and a stop limit order. For now, we're going to stick with limit, and later in the video, I'll also show you how a stop limit order works. When we click on this bolt icon, this is essentially going to make this a market order, meaning that it will just take the best available price in the order book and open our position immediately. So let's just do that for now. Then I'm going to choose a 5x leverage, which means I'm able to open a position worth about 5 times my margin balance, which currently is 100 USDT. Here we can either enter an amount of how much in Bitcoin futures we'd like to buy, or we can just select a percentage of our margin balance to invest. So let's go ahead and choose 50%. Down here, we can also see how much we will be investing for this position. Because we have a 5x leverage, the size of the position will be around 5 times our investment. And then let's say we believe that the Bitcoin price will increase, so we're going to click on buy long. Then we're going to have to confirm our order. Because it's a market order, it has been filled immediately, and we can see it down here under positions. The contract name appears in a green color, which means that this is a long position. Next to the contract, we can see our position size, the current value of our position, and our entry price. Here we can see the allocated margin for this position. This represents how much we have invested into this position and how much we could potentially lose if the price moves in the wrong direction. Then here we have the mark price and the liquidation price. If the mark price reaches the liquidation price, then liquidation will be triggered. The more leverage we use for our trades, the quicker we will reach the liquidation price, which essentially means more risk. However, we can always add margin to our positions and thereby reduce our leverage. We can simply click here and allocate more funds to this position. As we can see, this will lower our leverage and decrease the liquidation price for our long position. We can also automate adding margin to our position by turning on the auto deposit margin feature. When this is turned on and our position is getting close to the liquidation price, then KuCoin will continually add margin from our available balance to this position to avoid liquidation. So using this feature can lower the chances of getting liquidated. However, it can also lead to losing our entire available balance in the futures wallet if eventually our wallet balance hits 0 and we do get liquidated. So definitely be careful when using the auto deposit feature. The unrealized P&L, profit and loss, shows us how much we would profit or lose if we were to close this position right now. Then we also have the realized P&L. This shows us exactly how much we have profited or lost, selling a percentage of our position, as well as the fees involved with opening, holding, and closing this position. If we want to get out of the trade and close our position, there are a few ways how we can do that. The quickest way is to simply click on Market, choose 100%, and then click on Confirm, and that will close our position immediately at the best available price. Or we can click on Limit and set our target sell price. Then once we click on Confirm, we can see our limit sell order under Open Orders right here. Once the price hits our target price, our position will be automatically closed. Of course, we can also cancel any of our orders by just clicking on Cancel. Another way to close our long position would be to simply place a short position for the exact same amount. So we can come over here and enter the size of our open long position. But now we will go short, so we click on Sell Short. And that will cancel out our long position and get us out of the trade. If we don't want to close our entire position, we could also just reduce it. So let's say we want to reduce our position by 50%. We can just click on Market, choose how much of our position we want to sell, in my case 50%, and then click on Confirm. If we want to reduce our position at a specific price, we can click on Limit and type in the price right here. And when we confirm, we have a new sell order of 50% of our position at our target price. If we want to increase our position, we'll have to do that up here. So let's say we want to double our current long position. What we're going to do is look at the current value of our position and enter that amount right here for the next order. Then we simply click on buy long, and that will add that amount to our current long position. Let's do another example, but now we're going to go short Bitcoin. So we believe that the Bitcoin price is going to decrease. I'm going to do another market order, so I'm going to click on this bolt icon, and I'm going to use the slider to set a 3x leverage. Then I'm going to invest 50% of my balance into this position, and I click on sell short. Under our open position, we can now see that the contract name appears in a red color, which means that this is a short position. We also see that the liquidation price is above the current Bitcoin price, which makes sense because we are going short and we want the price of Bitcoin to go down. However, when the price instead moves in the other direction, we're losing money on this trade. And if the price goes all the way up to the liquidation price, we will get liquidated.